Hey guys, what's up? Today's video we're gonna do a full back testing in I think the Euro USD. So let's go, let's do it now. Boom, here it is, Euro USD. Perfect. So what I'm gonna do now is that I'm just gonna select a random date. Okay, a random date. Let me check. Let's go. Let's select a random date here. Alright, let me put it in 1 minute time frame, because in that 1 minute time frame I'm able to find better entries. Let's go for a date. Let's go to today's May. Let's go to February. Let's go to 9 February. Okay, perfect. So this is what we're gonna do. I'm gonna do an analysis, first the direction of the market, and then I'm gonna keep continuing with the rest. So let me delete what I have here, which is all of this. Perfect. And this is this is where we are now. So remember that what I used to do, I always do, is analyze higher time frames, and I go and I start doing it in lower time frames, right? So let's go first here to weekly time frame, and we start analyzing all of this. So as we can see right here, in a weekly time frame, we're bearish in the euro, and the price is actually reacting on this order block, which is here. Boom, here is, this is the weekly order block. That's why the price, when it gets to this point, it is having this reaction. We got this reaction. So let's go. Oh, that was monthly, sorry. And in weekly time frame, what actually happens was that the price reacted on this order block. I would say this one here did it almost, but I'm gonna count it because this is still an order block, a monthly order block. Okay, so that's why the price entered here and it continue. Apparently you're gonna start a retracement. Perfect. So this is it. Now in a daily time frame, we're bullish, as you can see right here. So the price is actually having a reaction on this order block. It reacted and started pushing up. Boom, and we have this kind of structure like this, but the price just entered here, and that's why this is going down. I don't take this as a lower, as a range beginnings, because it's liquidity and this order block is not mitigated, so that's why. Perfect. So we're bullish, but we are in a bearish retracement. We're in a bearish retracement. All right, in 4 hour time frame, let's check in 4 hour time frame. In 4 hour time frame, we have this range. This is the closest range to the price, so I'm gonna take this one. It's actually very clear. Boom, this is the range beginning, and then we have here a breakage, a boss right here. Once we got this boss, we have the next potential entry areas. This one is a decisional. This is also a potential entry point, to be honest. It's a potential entry point, so we need to wait for possible reactions in this point. And this is the scenario so far. This is the context we got from 4 hour time frame. We're bullish, and as well we're in a bearish retracement. So let me update this. We are bullish in a bearish retracement. This is where we are. Perfect. Now let's go to 1 hour time frame and see what's going on. So in 1 hour time frame, 1 hour, we're actually bullish as well. Let me check one thing before. Or this one. All right, so look at the next. This was the bullish 1 hour range. This was, that's what I say, was. Okay, so we have a liquidity sweep, liquidity has been taken, a break of structure, and then we got this, an impulse. Then since this was the strong high, I mean, it was supposed that the price respected this point and continue with the bullish trend, right? But since it has got this huge impulse, it didn't respect this low, and now we're bearish in 1 hour time frame. So that's why I'm just mark all of this to let you, I mean, to explain to you this. Okay, now since the price has been broken with this candle body, or with the body of the candle here, what I need to look for is the range beginning, the beginning of a range in 1 hour time frame. Right, so look, I think there will be here. No, not here. Perfect. And here we have it. There. Right, so this is the point. Supply zone, and we have here the take of liquidity, and then we have the boss here and the second boss here that confirms completely the retracement. Okay, now look at the next. What are we gonna do now? So since we are in a since this is a bearish impulse, let's see 1 hour time frame. Right, so this is a 1 hour. This is a 1 hour range, which is bearish. It seems it's doing a bullish retracement, apparently. It's in a bullish retracement, in a bull run. Perfect. Okay, and let's try to understand why the price is reacting here. So there is no real. Nah, don't like this. Right, so look at the next, my friends. I don't know if you can spot this order block, which is here. This order block, which is isolated here, boom, it was the reason why the price made this retracement, or is making this retracement. But look at the next. You see this? Seems it's not completely broken with the body of the candle, and it seems it's still doing the retracement. So that's why I say in 1 hour time frame we are bearish, because this is a very evident bearish range, but the price currently is in a consolidation phase, nearly to do a bullish retracement. This is a retracement, right? Now, like we will see the likelihood of the price to get to some zones. Okay, which are those zones? Those are the one I'm gonna mark here. For example, this one could be a potential entry area, but also we need to be smart enough to understand that the price can react to the closest one, which is this one. So all of this that I'm marking here, they are called decisional order blocks, and in both of them we would need 5-minute confirmation, so we can actually enter in the price comfortably, you know, in 5 minutes. Alright, so this is what happens. The price is actually in this phase consolidating. It can get to this point, after it gets to this point, it can continue with the 1 hour impulse, which is this one, and then get to one of these areas, 4 hour order block, 4 hour order block, and then we can have maybe a continuation of the main trend line. Remember that in daily time frame is bullish, so this is something we have to bear actually in mind, right? This is the context you would need in order to execute orders properly, right? Oh no. I want to check one thing about this tool. I like it, but I want to see if I can. I don't know if this demonstration you can change the color. Anyway, perfect. This is it. Okay, guys. All right, let's keep going. Let's keep continuing with the analysis. Okay, now let's go with 15 minutes time frame. And in the 15 minutes time frame, we are in the next situation. All right, look, I have found a confluence here. So this 1 hour order block is actually backed up by this range beginning in 15 minutes. So liquidity sweep, and then we have here a break of structure with a body of the candle, and this is the 15 minutes range. Okay, now yes, the price has broken this with a body of the candle, which means that this could be potentially or new strong high in 15 minutes, right? It means that from this point we will continue with the downtrend. But I need to be really honest with you, since this high is not backed up by any reaction in any order block, neither in 1 hour time frame or 15 minutes time frame or in any other time frame, I would say that this is pure liquidity, and the price has done these highs in order to trap people, right? So as an example, pay attention to the next. People who thought this was a reliable high, they thought that you can do the next, for example. Boom. They mark this trend line here, boom, a trend line, and this trend line here, many people execute selling orders here because, you know, three touches in a trend line, and since we are in a bearish trend, so definitely this should be a opportunity to sell. Look what actually happened. So people were selling here at this third pivot point, and look what happened. Probably some people put the orders here at the highest high with some pips. Boom, they were out with this stop loss, and even if they were able to maintain it, the order keeps always on their stop loss area, and then boom, they took them out. And also look at the next. People are watching this high as a potential double top pattern because they are watching the trend line and they thought, what they're thinking, it's bearish. So, but as I have said to you, this is actually liquidity accumulated, and we would never put any order here because this is a double top, but this is part of the liquidity, right? Learning or comprehending this well would save us a lot of money, seriously. Anyway, so this is what we have to wait. In this point, we need to wait for a 5-minute confirmation. But now that we are in 15 minutes, we can also wait for a 1-minute confirmation. All right, and now, since we have to execute orders as we should, this is what we're gonna do. All right, so this is the context, guys, so you have it very clear, in order that you have it very, very clear. So we are in 1 hour time frame, we're bearish with a bullish retracement, as well as in 15 minutes, right? And in 4 hour time frame we're bullish, and in 15 minutes we're bullish as well. So this is what we need to understand before we execute any order of the market practically. And I'm gonna count this for the simplest reason that even though the price is reacting in this order block, and in 1 hour we can see the next, like the price took the liquidity below this low, is enough to continue the retracement, right? And also if I go to 5 minutes time frame, I can see this progression in the next wave. So this is what I could say. The price had this 5 minutes bearish range. Wait. Hey, no, it didn't. Oh, no, yeah. Wait. Let me put it properly. No, it didn't work. No, it was liquidity. Okay, I cannot count with this one, but with this one, yes. All right, now how interesting, look how interesting this is. What the thing that I'm marking here is the beginning of a range in 15 minutes, right? So in 15 minutes time frame we got this beginning of a range. It's a bearish range, okay? So since the price broke this high with a bottom of the candle, so this was the range in 5 minutes, excuse me, and then we got this high. The price broke it with a bottom of the candle right here. Yes, and now we're bullish in 5 minutes time frame. And also if you can see the next, we have a likely potential range beginning in 5 minutes right here because of this reaction. Boom, here it is. And now we spot the minor or the micro, let's say micro direction, right, inside the real major direction that we have in the market, right? Perfect. Look, this is bullish, this is the boss, and this is the point to be mitigated. Right, let's go and let's do the summary of this analysis. Okay, this is all the context we should have. And how much did it take us? 20 minutes from the very scratch and explaining everything, but it shouldn't take us that long if we are not explaining like me, for example, in this video. But here is, so first of all, we have a bullish trend in daily time frame, right, with the price reacting on this. This is the daily strong low. The price make this breakage with the bottom of the candle, let this liquidity and continue with it impulse, right? Perfect. Now the price is reacting on this weekly or monthly order block, and that's why the price is making this retracement reaction. Now the likelihood to the price to go down is high, so we are just operating a retracement, right, or a bearish retracement in a daily time frame. Okay, in 4 hours is practically the same. So in 4 hours we have the beginning of a range right here, very clear, evidently we have a breakup structure and we are in a bullish impulse, right? But the same story, since the price reacted on this order block in a monthly order block, boom, we have a retracement. And same story, we're just executing orders towards the real direction, that in this case is a bearish retracement, right? Perfect. And what happens with the retracement? The retracement should end in one area, maybe here, right? Why those areas? Because those are the 4 hour time frame decisional points, and in here we will need a confirmation as well, like in this area. So once we got these confirmations, even here or here, we can continue with the daily time frame, which is bullish, and keep buying, right? So far we need to sell. Okay, that's it. 1 hour. In 1 hour time frame, we spot the beginning of a range right here. Oh, sorry, that was a mistake. In 1 hour time frame, right, that was the range in 1 hour, but then it was broken with the bottom of the candle, and now we're bearish. So in 1 hour time frame, we're bearish. This is the beginning of the range, and these zones that are marked here are potential retracement zones, so we can sell from these points. Okay, to continue with the bearish retracement. All of this should be clear to all of us. And if you see, in every different time frame, we see a potential direction which is different that we see in lower time frames, right? So, for example, daily and 4 hour time frames, the main trend line is bullish. But if we go to 1 hour and 50 minutes, it's bearish. And we need to understand that these bearish trend lines in 15 minutes and 1 hour is not the strongest. It's just a retracement. And once we get this clear, we can understand, or we cannot get biased by the price. It means that we're not gonna keep selling because we are in a bullish trend in 4 hours or on a daily time frame, right? But this is how when it gets very tricky. In 50 minutes time frame, we see the selling trend, right? Or the bearish trend, which is this one. Boom. So, what is the thing here, or what should we need to bear in mind? We need for the price to get to this order block, and once the price get there, we can sell. So we need to do two things. You can either wait for the price to get to this zone and then execute an order, or take advantage of this movement, which we know, or we at least expect, will be bullish until the price get to this point and continue going down, right? So we can take advantage of this movement, and this is what you need to be aware. You can buy against the trend, so this will be a counter trend trading operation, and then continue with the main trend, which is a retracement. All right, perfect. Now let's go and let's execute orders. That's to do the things that we wanted to do today, which is execute orders. So let's go, my friends, let's do this. Perfect. So let's go. Let's start with this. So I always execute my orders at 7 a.m. according to my time. So at this moment I will be executing order 7. Perfect. So let's see what actually the price does in 15 minutes time frame. Let's see. All right. What? It's not moving. Oh, jeez. Hey, so weird. All right, so look, well, 15 minutes. I don't know why in 15 minutes the trading view didn't show how it looks, how it moves. But look what actually happens from Sunday to Monday. So in London session, because this is the say in London session. Yeah, look, this is London session, London Monday. So the price starts pushing up, and it seems it's respecting kind of the, yes, it's kind of respecting the 50 minutes range. Remember that this is the 50-minute range, but look in the next. The price did take the liquidity of these highs. It took, sorry, the liquidity of these highs. It made the next from here to here. But also above this high, above this 50 minutes range, there is liquidity trapped here. There you have it. So this is liquidity above this high. So it should be, maybe it can be taken. Now look at the next. We need a confirmation in 5 minutes or either in 1 minute time frame to continue with the selling operations, right? And another possibility is that the price keep continue up, and that's it. But anyway, let's keep moving. I didn't understand why in 15 minutes it doesn't move. All right, so hypothetically, I'm here. This is Monday. This is the time I'm actually executing orders at the market. I don't get why in 15 minutes it doesn't show anything. Still, I have to go to 1 hour time frame. And what I want to see is this breakage. So the price did break with the bottom of the candle. Here is, yes, the 15 minutes range. All right, since this has been broken, potentially we have a possibility to buy a little bit more until the price takes this liquidity, which is here. So all liquidity that is accumulated here can be taken, but what I'm actually watching here is that the price can do the next. When the price breaks highs like this one, right, like these highs, for example, when it's broken with the bottom of the candle, the price may go a little bit up in this case, and they can make profound retracements, right, and can have a reaction here and continue with a bullish trend, retracement or bullish trend. But it's dangerous to execute orders at these points to buy, because actually the price is super high, right? Let's see. So as in 1 minute and in 5 minutes time frame, the price didn't make any breakage. What I'm gonna spot here will be the beginning of a range in 5 minutes, which is the next. Look, this is the beginning of a range, and now we have the next, this breakage with a body out of a candle. Perfect. Now I'm gonna look for a potential entry point that may be with this one. And with this, I'm gonna see if I can grab a little bit of money from this movement until the liquidity is taken. But how much? Maybe. So this is mitigated, probably until this block or above. All right, look. This will be my take profit limit. Boom, there. Right, so this is the high I will hit, for example. And now I want to see another potential entry order like this using a different method called the booster method. So order block cramp, and here I'm gonna see the entry, the possible entry zone. All right, so here I'm gonna find the range beginning in 1 minute. I got it. All right, got two possible entry points. Excellent. So this is the range beginning in 1 minute. Then we have this breakage. Then we have this of this liquidity, and I have two possible entry points, which is this, the range beginning, and here. Now let's see what actually happens. This is the 5 minutes block I marked, and here it is. And now let me check one thing in 5 minutes, just to confirm one thing. This is an entry by continuation in 5 minutes, and this is one as well. Now you're gonna see how much liquidity is created. If we have liquidity accumulated here, and the price looks like it's gonna pushing up, well, there I would put an order here, and the price will get to here, boom, continue. But if the price make a huge retracement and makes the liquidity right here, I would risk, and I would put an order here. It will be riskier, honestly. But let's see. All right, it's going up. Eesh, no, didn't give us any opportunity. Yeah, it didn't give us any opportunity. Just continue pushing up, which is fine, right? It's fine. It's fine because it's doing what we expected seeing from our analysis, right? I think this day, which is Monday, we didn't have any opportunity, at least in New York session, because definitely in London session there was a chance. There was a chance in London session where, yeah, London. Look, for example, in London here, here, here at this point, this this was the possibility in London session. This one. Oh yeah, in London. Well, since I don't execute any orders in London session, well, we didn't have the chance. But in London, there was opportunity. The price entered in this order block, it pushed up. Here, it made an order block trump, and they continue going down. So, okay, hey, XAD. What strategy do I use? I use smart money concepts, right? I use smart money concepts for everything. Okay, so this is actually what I do. This is what the strategy I use. From the very beginning of the video, I was making back testing, and I was waiting for the price to get to this order block. And I think this is what I'm gonna do. Look, you see? What time is it? This is okay. I'm still on time. And look, since we are in a 1 minute, we are in a 1 hour time frame, and we are in an order block of in this order block. So I would need a 5 minute confirmation. And this is what I'm gonna look. So I go to 5 minutes order block, and I'm gonna wait for a confirmation. It says how, tell me how you use it from the beginning. Um, there are some concepts you need to bear in mind to get better in this strategy. I'm gonna show you something here briefly. I have a YouTube channel, and in this YouTube channel, I explain everything from zero. So the first thing you would need to understand, let's say, it's look, it's the market structure. When you get the market structure or the basic concepts, it will be way easier for you to understand this strategy. So for example, in my YouTube, which is this one, and you go to my videos, in the latest, because those were the latest video, the first videos I made in this channel, they were made in order to explain the structure. So here I explain the market structure. So a very simple way to explain it. So I explained there what is a trend line, for example. How do you spot the beginning of a range, correct? Then I explained to you something that I call the strong high or strong low, which is the highs and lows that will be respected by the price. Then I explained another concept, which is called the order blocks. The order blocks. For example, in this example that I'm watching here, this is an order block. Yes. So I explained that the order blocks are points in which the price had a huge reaction. So for example, if you see, I marked this zone, and when the price hit this zone, it got a reaction. You see, it was going with a bullish candle, and then it went with a bearish candle. So it had a reaction. And then I explained something that is called the liquidity, because in this strategy, you need to understand where is the money accumulated. And this is, in other words, liquidity. Okay, liquidity means money trapped or money accumulated, and we need to be against the liquidity. Right, so this is my recommendation. So watch those videos, and you can come to the backtesting sessions that I do randomly, and you can put into practice what I'm explaining. Okay, but thank you so much for your question. All right, so now I'm gonna keep explaining this. This is, as I said before, I need a 5-minute confirmation here. Oh, by the way, we will also find the confirmations in the YouTube channel here. Confirmation. So I explain everything there. I kindly suggest you to watch it, and there is free for all of you. Okay, so there is a lot of opportunities for you to learn without paying courses for other people. All right. So thank you for your questions. Now I'm waiting here for a confirmation in 5 minutes. I'm gonna go to 50 minutes time frame to see one thing. All right. No, no, 50 minutes now. All right, 5 minutes. 5 minutes time frame. Let's see. Right. So look, this is what happened. In this. Okay, as you see, I marked the order block. The order block had a reaction, but since this is I'm out from the time I execute orders, I respect my trading plan. I don't execute more orders. So the trading day has finished for me. I'm not gonna keep executing more orders. That's it. So the next day I'm gonna keep actually executing orders will be on Tuesday. So let's see what happens on Tuesday, okay? And let's see what the price does. Do I use Fibonacci? No, I don't use Fibonacci. In this strategy, I mean, I like smart money concepts for two reasons. You can see the market here; it's clean. My analysis is clean. You don't see any. You just see key levels, these zones, and some lines, and it's easy for the eye to understand. So I don't use Fibonacci because it makes it more complex to understand. Neither the indicators, nothing like that. Pure simple strategy, pure market structure. That's what I use. Basic market structure once and over again, once and over again. And with that is enough. And it's cool. It's cool because from my point of view, for me personally, I get the market clearer every time I analyze it. So that's why I use this. Right, so let's see. Let's continue with the backtesting. So the reaction was here. Mm, we are not yet executed any order at the moment. I'm just waiting here for confirmations. All right. So the price is actually trapped here. It entered here, boom, reacted at this point, and then we got this. This is the high. Mm, what I'm waiting here is the next. Right. So as you can see here, in the block it says confirmation in 5 minutes. I need a confirmation in 5 minutes. Okay. So I can confidently start selling. Why? Because this is a selling block. I cannot sell in this point because in any moment the price can continue pushing up, right? Because it's bullish because of this movement, right? However, if the price provide me a confirmation in 5 minutes, that would be here, for example, and I have this breakage, I can confidently sell. So far, no. So far, I'm not gonna sell. I'm gonna restrict myself. Ah, but it's kind of doing it. Mm-hmm. The order block confirmation in 5 minutes because this is a decisional, and we have still liquidity above this high. So well, let's see. Let's wait for the confirmation. Remember that in trading, it's not about putting orders just because you need a reason for executing these orders. So that's why you need to be extremely patient. This is the reality of this. You need to be very patient. All right. So look what happens. The price is just having a reaction here. It's not enough for us. All right. You see, this is why I didn't execute any selling order here, because if we have put a selling order, we will be out. Now look at the next. The price is reacting on this block. The price reacting on this block made this kind of a confirmation. Mm-hmm. Mm-hmm. All right. So it's another day without trading. The price, since it's in a 1 hour time frame, we don't have a confirmation. But look at the next. If the price breaks this low with a body of the candle, it means that we will have our confirmation. It hasn't done it yet. And as you can see, I'm out of the trading session. 12 of the midday, I'm out. I'm not executing orders here. And boom, we got a confirmation. This is what I was waiting for. And sometimes we need to wait a lot. And since we're just executing one order per day, this is what we need. Perfect. So by Wednesday, this is what some of the people or some of the traders online says or sell to some of us, that they say just work 2 hours per day, 3 hours per day. If you see this, we made an analysis and we Monday and Tuesday we haven't worked, right? Since we haven't worked, it's fine. Now let's wait in 15 minutes. Hey, what's going on? All right, let's give 5 minutes. This is London session, and here is a selling opportunity. London selling. Boom. There we are. All right. So this is the 5 minutes range. Body of the candle. Still bullish. Too many tops here. Hmm. It's getting very interesting, this zone, for two main reasons. We got a confirmation and a breakage in 5 minutes. No, let's follow the trading plan. So the price has reacted on this high. I didn't like it much, but it just reacted on it. And look what the price is doing here. Order block, order block. I'm gonna put an order here. An order block Trump. Mm, 4 hour time frame is reacting. Yeah, yeah. Let's do what I was thinking. Order block Trump, and now I'm gonna execute an order here. I think the price will provide me an opportunity. Let me check if this may work. Alright, the range beginning is right here. It depends how many liquidity it provides here, it creates here. Alright, it has done liquidity. It has left liquidity. So I can execute an order here. Supply zone here. Selling order there. So 2.53 pips more or less. Perfect. And now I'm gonna see in 5 minutes time frame how it looks like. This is, you see, this is the 5 minute range. No, it's fine. It's properly correct. It's correctly correct this order there. All of this liquidity accumulated, money trapped here. Now let's see what happens. This is full bearish. Come on. Yeah, it's going down so quickly. All right. So the opportunity of selling here, that I said in London, right? And in London, it provides opportunity, and that's why the price is pushing down. Good. It happens like this. All right, now let's see what other opportunities we may have here. Still, we have opportunities because people are buying here. People are buying here, but we're not gonna enter here. We're gonna wait for opportunity. So let's wait patiently. Let's wait patiently for our opportunity. Yes, let's wait. Let's wait patiently. This is 5 minutes? No, this is 50 minutes. 5 minutes time frame. All right, let's wait. Let's wait. Let's wait. Oh, no way. No, I just went out. Look, such a reaction. We weren't, I mean, unfortunately, the price haven't give us the chance. Haven't, haven't, has not given us the chance to enter in the price properly. Look, this was the order block in London session. Unfortunately, we weren't able to execute orders there because, well, I don't execute orders in London. And then look, but we were so freaking right about the reaction and the movement. Now, what's next? Patience. That's the word. Patience, friends. It took all the money of the people who were here buying, and now I think it will continue going down unless it opens our entry point area. Still is bearish, by the way. Oof, no way, no, this is so crazy. This reaction is hilarious, honestly. It's fun when you don't expect this type of movements, but they happen anyway, right? Right, so okay, no reaction. Let me check one thing here before we continue. 50 minutes time frame, 1 hour time frame. Yeah, I don't know. I don't think the price will get to this point. No. Hmm. All right. Let me check one thing here before the price take us out from the session. So we are 3 days executing orders in the market, patiently waiting for the opportunity, and unfortunately, we haven't got any opportunity so far in our session, right? Because if we or I worked in London session, well, I would have a chance. Two chances. Two chances that I told you before they provide the market provide opportunity. Now let's check. Boom, 1 minute time frame. Hmm. Yeah, there is a range beginning. Look here. Uh-huh. Range beginning there. Right, so all of this is liquidity. The price almost get to the order block. This could be a potential entry point. Staking the liquidity. 2 minutes. Alright, it's reacting in this 2 minute block. Uh, yeah, let's put the order. 5 pips is a lot. Oh no, not that much. 9 pips. All right, let's see what actually happens with this order. This is a booster order. We put in here. Great. Let's say one thing in 5 minutes before we continue with the movement, and I want to understand why the price is reacting here. Yeah, an imbalance, upper value gap. All right, in 15 minutes, what is showing us? All right, this was all right. So look at the next. Let's try to update the price here. This was over 15 minutes range, and it was broken with the body of the candle. Now in 15 minutes, we're bullish. But let me look for that range beginning in 15 minutes. This is the range beginning in 15 minutes. So in 15 minutes, we're bullish. Bullish in a bearish retracement. Bullish retracement. Now the price entered on this no order block. Yes. That's why it's having such a reaction. The range beginning in 15 minutes will be this one. And it's pushing down. Alright, well, let's see what happens, honestly. We don't know. Let's see what happens. What time is it? 11. Alright, so I'm gonna let the order at the market to see what happens. And we were out. Okay. Yeah, yes, I didn't. How it's impossible. I didn't look for this imbalance. Oh, how fool! What a fool, man. Booster. Forced. So I just put an order, but honestly, guys, it was not properly executed. I just wanted to find an opportunity, and I wasn't able to wait more. Idiotically, honestly. So I lose a 1% of the account there. All right, let's wait for the next opportunity in the market. Here in all right, here it is. All right, 15 minutes time frame. We are bullish. It seems that the price is reacting in this. In nothing, honestly. There's nothing. I'll go to 5-minute time frame and let's watch for the bearish bearish trend line or the bearish range. So we got the range here. It was broken, then it was broken with a body of the candle, and now let's spot the beginning of a range in 5 minutes. 5 minutes beginning of a range should be is right here, right above this point. Now this is the decisional in 5 minutes. All right, look, so this is what we're gonna do. Here. In this point, I would wait for a 1 minute confirmation here. 1 minute confirmation to sell, right? But if the price goes up enough, I would let this order, which was the booster order that we put on Tuesday, Wednesday, that was not activated. Right, so let's see what actually happens during this session, and let's see, because we're still bearish. We are still bearish. We're in a bearish range in 5 minutes. This is the bearish range, look. So at the very beginning, we got this range in 5 minutes, pushing up, right? Then it went to, wait, let me put it clearly for you. This was the 5 minutes range, this one, right? What happened after this? The price had a reaction, make a breakage, right? And after this breakage, it provided this opportunity. Now, if you see here, this is the range in 5 minutes, and it's completely broken by a body of a candle, this one. Boom. Since this we got this breakage, we are in a bearish 5 minutes range, which is from here to here, this one. Boom. So all of this is like the scenario we got in 1 hour time frame. We have an imbalance here, right? The price is moving here, probably will push up, it will get to this zone, and then we're gonna wait for a selling continuation pattern. Okay, this is it. Let's go. Let's wait. 15 minutes. I don't know why in 15 minutes it doesn't work. All right, here we go. Slow but steady, slow but steady. All right, what is the price actually doing here is accumulating orders. People are here biased by the movement, and they are putting here orders. They're selling at this point. Actually, I don't like this. All of this is noise in the market, and actually the order I execute was mistaken. Wait. All of this is not correct. Let's keep moving. What time is it? No, we're really out. Let's wait for Friday. So look, all Friday, all Tuesday, Thursday, the price consolidates. It's normal. That's what the price does. All right, now it's Friday. Now it's Friday, 7 a.m. And it's still accumulated. I don't like how this looks like, honestly. But this order block right here, this decisional, for me, is getting more and more relevance, because all of this is liquidity accumulated. Let's see what happens on Friday. Hey, but I didn't get it why this thing doesn't work. Doesn't show anything. Alright, so this is what it has done so far. Alright, let's see. Boom. Okay, goes down, goes up. Accumulating orders. There you go. Alright, so look, this analysis of this week finishes with just -1 execution. So we didn't have any chance in New York session, and a complete week wasn't profitable, but it's profitable. Let's say If we don't execute any order, if we don't execute any order, and at least I got -1, but it was a mistake, I realized it. Well, it means one thing, that we are following our trading plan and we need to be patient enough, even though I wasn't enough patient because I put a extra order there. So key here, guys, is be patient enough and wait for further opportunities. For example, I don't know, but probably I think after this analysis, the price will have a reaction on this decision as we marked. Maybe here in this one. I'm not confidently sure, but I would say. But there is also chances that the price simply on Sunday, especially Sunday, when the price finishes like this, in this type of consolidations are extremely, the price is actually very dangerous. And if you let orders at the market open, you're fried because when it's a weekend or when the session finishes, you have seen the huge gaps the price does. So if you have money put there in, or you have money on the table, the price won't respect any stop loss. It won't do it. And some of the brokers, they have this slipperage thing. They don't cover that. So you are the one who cover with your money these erratic movements from the price. And guys, that's not fun when you have expected to lose, I don't know, $100, 200, and then you lose 1,000 just for the spread and for that leverage thing I'm telling you. So be aware about it and bear that in mind. And if you have one of these series, let me know in the comments, okay? Let me see what happens. Oh, Jesus, nothing happened. Monday is Monday next week. London session, and it's still accumulated. And it's unbelievable how uncomfortable you may feel when the price is that accumulated. It's super uncomfortable. I actually don't like this sensation, but it's what it is, you know. All right, it went down. It went down. At least the price break this consolidation part. Right. Fine. That's fine. That's actually very fine. Uh-huh. All right. At least no. Well, when we got this in 5 minutes range, we can see opportunities right here. I still think this will be liquidated in any moment. It's Tuesday. Well, I'm just advancing too fast. This is the 15 minutes range, and the price is reacting in this order block in 15 minutes. Here. Oh well, here. No. And this one. Demand. Demand. Mm-hmm. Now it looks interesting to me to buy. Mm-hmm. Bullish retracement. Mm, this is an order block in 1 hour. Plenty of liquidity above this high. Oof. Supply. Mm, mhm. This is Tuesday next week. And in Tuesday next week, what I'm watching here is the price reacting in this 15 minutes range or order. And now this is the block. It's the 1 minute range. Here it is. And we will find a confirmation maybe here or even here. What time is it? I see. What time is it? The confirmation. Right, let's see. This is the next week. So what happened next week? Like this. I was going 5 minutes and see what actually happened here. Yeah, kind of the same. Boss, balance. Let's see. Right, it gets here, and if it does the confirmation in 1 minute, we can get and sell. Nope, no confirmation at all. Perfect, it's fine. Oh, look, this is the order block. I'm not so sure if it's gonna respect this one as well. The order block, liquidity, liquidity, liquidity. What time is this? This is 8 o'clock next day. And we have an pending order here. The price reacted on this block right here. Maybe a 15 minutes range, maybe. No, still not bearish. But let me check one thing here. Five-minute range here, boss, breakage, liquidity. Maybe it would react here. Who knows? Alright, so look, the price did respect our entry point, which was this one. Fingers crossed that we're not out. Fingers crossed we're not out. Not out at all. Right. So the order, this 1 minute confirm, we are entered in a 1 minute confirmation order. This is what we actually do. That's why it gets so silent for a while or so quiet, because I was just actually analyzing properly what was the price doing. So I can properly explain to you now that I understand what's going on here. Here it is, sell, supply. All right, let's see. Let me explain to you
why I put this order here. Let's put a play and let it play. So in 1 hour time frame, as you can see here, we're not bullish, we're bearish. It was out. The reason why the price reacted on this block was because of the next reason. Let me tell you why. Let's stop there. So we're bearish in 1 hour time frame. This is the complete 1 hour range, right? This is the complete 1 hour range. This one, boom, right? The price made a retracement, enter here, and here we were looking opportunities to sell, which the price didn't provide us anyone so far, right? Now in 50 minutes range, we were bearish here, and that's why I put an order here, because I was waiting for the confirmation, and we got a little bit of joy, and then we were out. And that's it. Why the price reacted here, and the reason I put the order here, I found this confirmation in 5 minutes. There was a block, the price reacted kind of well, but then we were out, unfortunately. But this happens most of the times. All right, never mind. Right, guys, I think I'm gonna stop here. So 2 orders minus 2. This one was well developed. It was confirmation. So yeah, nothing else to say, friends. Nothing else to say. The price will keep pushing down until these levels. Five minutes was no, yeah, and this is the thing. I got my mistake. 5 minutes trend line was broken. This was the high, sell. The closest range beginning in 5 minutes after this breakage was this one. This one. This was the actual strong high here. That was my mistake. This was the strong high. And then what happened after this? All of this becomes liquidity, and the price, yes, reacted on this order block here that was not mitigated in 5 minutes. Here. Oh, for a little bit. Exactly, there you go. Well, it didn't open unfortunately, but this was the main reaction. So this one was not the real strong high in 5 minutes, and this was effectively liquidity. That's it. Order book trump, order book trump, and there were opportunities to sell. Anyway, well, very interesting, my friends. We learn a lot from our mistakes, and I hope you can learn from mine. However, we just got the real market direction or intent. What was this one? And now we want to wait for the price to get here and have such a reaction pushing up, right? It was actually very weak. But anyway, this you just saw an example of how I can get biased by the price. I just looked for the 15 minutes time frame, but I didn't back it up with the 1 hour time frame. Since I didn't do that, definitely my execution was poor, and that's why I lose the last order, right? And I want you to understand that, because that will help you to not to make mistakes as I did. All right. Fine. So I hope you can learn from my mistakes. See you then in next backtesting session. All right.